Great. Awesome. Thanks a lot for everybody joining. Today, this is an information session on the Main Street COVID Relief Grant Program. We're going to go through, provide an overview of the program. Get access to my deck here. We're going to provide an overview of the program. We're going to look at eligibility requirements. We're going to look at funding, the application itself, resources, and go through a Q&A. Before the Q&A, we'll go through some frequently asked questions at the top, and then we'll go to your questions. If you have questions as we're going through this presentation, by all means, go ahead and type them up in the question box. And then if somebody else has asked a question that you're interested in the answer, please use the vote feature, the thumbs up feature, so we know what questions are most urgent and that we should get to. We're not going to be able to get to every question, but we want to make sure that we address the most urgent questions that you may have as you're filling out the application. I will say up at the top that the application is now live. You can access the application via our website. We'll publish that later in this presentation. You have 10 days to fill out your application. So just a quick overview of the program. $64.2 million is available in grants for Minnesota-owned and operated businesses that can demonstrate financial hardship due to the COVID-19 pandemic. And grant amounts between $10,000 and $25,000 based on the number of full-time equivalent employees on staff. And applications will be reviewed and randomly selected by the state, and then grants will be administered by local and regionally based nonprofit agencies. Once again, online applications will be accepted from September 20th to September 29th. Applications will be selected through a randomized selection process, and applications selected for consideration will be notified sometime in October, and then grants will be dispersed between late October 2021 and June 2022. Over the course of the program, most of the applications will be processed within weeks of being notified, but some applications may require a little additional time to get all their information in. So who is eligible? Businesses or nonprofit organizations, and by nonprofit organizations, we mean those that earn revenue in similar ways to a business, with primary operations located in the state of Minnesota. They're at least 50% owned by one or more residents of Minnesota, employ the equivalent of 200 full-time workers or fewer, and have a minimum total sales or revenue of at least $10,000 for the 2020 or 2019 tax year, and that they can demonstrate financial hardship due to the COVID-19 outbreak and are currently operating and have plans to continue operating. This also includes sole proprietorships, independent contractors, businesses without a permanent physical location, home-based businesses, and businesses with no employees besides the owner. So now we're going to dive into a key detail of this program regarding financial hardship. So any business that applies must meet the definition of financial hardship to be eligible for the program. The first definition is that the business was directly restricted by an executive order to reduce the spread of COVID-19, or the business had a 10% decrease in annual revenue between 2019 and 2020. Some businesses will meet one of these definitions, some businesses will meet both definitions, and some people applying, unfortunately, will not meet either, and those businesses will not be eligible. You just have to meet one of the two definitions of financial hardship. There's a special case for businesses that started in 2020. They can qualify for financial hardship if they were directly restricted by an executive order. So, for example, if you were you started your own hair salon in 2020, you were restricted by an executive order limiting either executive order that closed your facility. Let's say you started it in January in 2020. It was closed in March, and then it was restricted from operating above 100% capacity later on that year. So you would automatically qualify for financial hardship. You wouldn't be able to compare 2019 and 2020 revenue because your business didn't exist in 2019. So here's a summary of executive orders. There's a number of executive orders that impacted many businesses, sometimes overlapping executive orders, sometimes closed businesses or restricted businesses. but the key ones to know are Executive Order 2004, Executive Order 2056, and Executive Order 2099. And I just want to talk about quickly the effect of executive orders. So if you're a business applying and you're like, yeah, I was restricted, I'm not actually sure if I was directly restricted by an executive order. Well, think about, obviously, you know your business better than anybody. Some businesses were directly restricted by an executive order to reduce the spread of COVID-19. Those are those businesses that typically require customers to be physically present to receive goods or services, and they were deemed to be non-critical sector businesses. So what's an example of a business that requires customers to be physically present, but is a critical sector business? That would be like a grocery store, right? So a grocery store was not directly restricted by an executive order, though they were subject to executive orders regarding masking and whatnot, but they were never asked to not operate or reduce their operations. But almost all businesses were indirectly impacted by an executive order related to the COVID-19 outbreak. That includes, once again, critical sector businesses like grocery stores or auto shops, businesses that don't typically require customers to be physically present, like online retail, or businesses whose supply chain includes businesses directly by an executive order. So like a restaurant supply business, your business was able to operate at full capacity and not directly restricted by an executive order, but your customer base, those restaurants that you supply, were not purchasing your products because they were not operating or they're operating at a reduced capacity. You no doubt were indirectly impacted by those executive orders and could have been experienced financial hardship due to that. So you will qualify if you meet that 10% threshold. What are some examples of indirect impacts? Direct restrictions, like a bar or restaurant that cannot operate above 50% capacity due to EO 2056. An indirect impact would be a restaurant supply company, or a dental or medical office that was restricted by 2009. That would be a direct restriction, but an indirect impact might be a medical transportation business that had a reduction in customers, transporting elderly people from the assisted living facility to their dental appointments. If those non-critical, non-essential surgeries and procedures were eliminated, you'd have less customers. You're indirectly impacted, and no doubt saw a decrease in revenue from that. So who is not eligible? Majority ownership of a business is owned by one or more residents outside of Minnesota, or a nonprofit organization that does not earn revenue in similar ways to a business, or a business that started operating after December 31st, 2020, or a business that had less than $10,000 in revenue per year for each 2019 and 2020, or cannot demonstrate financial hardship due to the COVID-19 outbreak, which we talked about before, or not currently operating or plan to close soon. So we talked about eligibility. Now we're going to talk about the prioritization of applications. Priority will be given to businesses that did not receive assistance from one or more of the following state programs. This includes the Small Business Emergency Loan Program, the Small Business Relief Grant Program, the Movie Theater and Convention Center Relief Grant Program, and the state-funded County Relief Grant Program. If a business received a grant from one or more of these programs, they are still eligible to apply and to be considered for an award, but in a randomized selection process, they will be weighted differently, such that they will have a shot, they'll have a chance to be selected, but they will not be prioritized ahead of applications that did not receive a grant from this program. So if you did and you still meet the definition of financial hardship and you do need these funds to improve the survivability of your business and recover, by all means, please apply. There's also another layer of prioritization based on geography. 50% of funds will be made available for businesses based in Greater Minnesota, and 50% of funds will be available for businesses based in 7-county metro. And then there's another prioritization category, such that 18 million, a minimum of 18 million, will be awarded for businesses with 6 full-time workers or less, 10 million for Black, Indigenous, and people of color-owned businesses, 2.5 million for businesses that are majority owned and operated by women, and 2.5 million for businesses that are majority owned and operated by veterans. What can the funds be used for? The funds can be used for working capital to support the business. That includes payroll expenses, rent, mortgage payments, utility bills, and other similar expenses that occur or have occurred since March 1st, 2020 in the regular course of business. This does not include real estate purchases or major capital costs, improvements. This is about working capital to keep your business running. Now we're going to talk about the application selection, review, and award process. So you will apply online between September 20th and 29th at the following address. If you follow that address, there will be a link to an application portal. We'll go through what that application portal looks like in a second, but it is live right now, and you're welcome to log off and go check it out. But by all means, stick around for some additional information that might be helpful. All applications will be reviewed for completeness and validity. Complete and valid applications will proceed to the randomized selection process. And then selected applicants will be notified that their application has been randomly selected for notification or for consideration. And then applications will be assigned to one of the 17 nonprofit administrators who will review the material that you uploaded. They may come back and request for additional material to verify pieces in your application. And then once confirmed, you will receive an approval, a notification from them that you've been approved, and then you will sign an award acceptance agreement. And then after that, you will receive the funds. Most of the funds are distributed via electronic ACH service, but each administrator, if you don't prefer that, may be able to accommodate you differently. These are the organizations that will be that we're partnering with to assist with administering these grants. So metro-based organizations are on the left, and Greater Minnesota organizations are on the right. And we give our gratitude to those organizations for helping us administer what will be thousands and thousands of grants as quickly as we can. So what will the application questions include? Eligibility questions on the grant application include who owns the business, is the owner a resident of Minnesota, where is the business located, so on and so forth. And then we're going to ask for documents to upload documents that verify the information on your application. So that would include like 2019 and 2020 tax returns. Of course, if you're a business that started in 2020, you won't have 2019 tax returns. So you'll upload all the information that's relevant, specific to your application. So now we're going to transition, and we're going to just step by step, not through the entire application, but just a broad overview of what it's going to take to complete your application. So step one, you're going to sign up. You'll follow that link on our website, and the portal will ask you to sign up. You will need a correct email address to you, unique to you or your business. So your email address will be associated with your application, and you can only use that email address once for one application. And you should only be submitting one application anyways. We could talk about that a little bit. It is not recommended to use a mobile device, and we recommend using the freely available Chrome browser. So Chrome is available on every platform that I know about, and it is free. So I don't think anybody should have a challenge in finding it, as long as, of course, you have a solid internet connection. I will say that this does require an internet connection. It does require a computer. So if you're facing barriers to accessing that, I highly recommend reaching out to your local library where they will have computers and internet available for you and to help you out. Completing the application. So step two, you'll create a profile. Now this is important to note that your profile is not your application. This is just the profile that will be associated with your application to let us know who you are, separate from your application. So we'll process that application separately. You will have to answer a couple questions twice. It's a little annoying, but it's so that we have a good and thorough process, and we can make sure we process your applications as quickly as possible. So you'll create your profile, and you fill out your information. And then once you complete your profile, then you'll have access to start your application. you'll see the plus sign get started, and that will launch the application portal. And then you'll progress and you'll see your profile name up at the top. For example, this is Minnesota Business Inc. Maybe that is actually an actual business, but this is just a fake name for now. And then you will go through the application. It's roughly 20-ish questions, depending on the characteristics of your business. The form is sensitive based on your answer, so you won't see all the questions up front. You'll only see the questions that are relevant for you. So just progress step by step through the application, and then the form will load questions that are relevant for your specific business. And so you'll go through and you'll fill that out. And then step 4 is then you'll upload required documents. You can, it's important to note that you can upload only one file per field. Files can be as many pages as needed, but it can only be one file. So we highly recommend using PDF. There's a number of free applications via mobile or online that can convert your many-page document into a single PDF. I highly encourage you using that, though we can accept any image file or document formats such as PNG, .pdf, .jpeg, .word, whatever document that works for you. Just note that, you know, if you're taking pictures of your tax forms using your cell phone and it's 6 different images, you're only going to be able to upload one image. And if we need the entire document, you're going to have to consolidate that into one file. So there's a number of applications out there that can help you do that. For example, I use application called Genius Scan, and it works pretty well, and it's totally free. So that's step 4. And then step 5 is you actually submit your application, which is the most important step. And I want to make sure everybody does this correctly. So you'll complete your application, you'll mark it as complete. No doubt there'll probably be 1 or 2 questions you forgot to answer. The required questions that you forgot to answer, the system will remind you, and it'll show you exactly which questions that you still need to complete, and it won't let you progress until you answer all those questions. And then once you get through that, you'll mark complete, and if everything's answered, you'll progress to the next screen, which will ask you to submit the application. One thing that's important to know is that you can mark it complete, and you can still edit the application. So if you want your tax guy to take a look at it, or your CPA, or maybe your business partner, you can have them review it. You can edit it, whatever you need to do before you submit it. But you do need to submit it, and you need to submit it before the deadline. And you have to click that green submit button. Do not forget to click the green submit button. I know that I'm going to be watching these applications come in, and an hour before the applications close, I'm going to see a number of applications that are not marked complete, or that are marked complete but not submitted. And I'm going to feel really bad about that. And I want to make sure that absolutely everybody who wants to submit an application and is marked complete hits that green submit button. We will not receive the application until you hit that submit button. So please do not forget to hit that submit button. Okay, I think I've repeated that long enough. We'll go to the next slide. So that is how you submit your application. And so now I want to talk about some frequently asked questions. Once again, we'll go through some questions that we expect to get. And then if you have any additional questions, please enter those in the chat now. And if there's any questions that you want to see upvoted that you want to make sure that we get to, please use the thumbs up feature and let us know what those questions are most urgent to you. So frequently asked questions, residency. So what does resident of Minnesota mean? Does that mean permanent resident or citizen of the United States? So resident of Minnesota means any individual who's domiciled in Minnesota or is domiciled outside the state who maintains a place of abode, that's to say where you sleep at night, in the state, and spends in the aggregate more than 1/2 of the tax year in Minnesota, unless the individual or the spouse of the individual is in the armed forces of the United States. So that's Minnesota Statute 290.01. That's the definition we're using for resident. The key thing to note here is immigration status is not a factor. So the next question is, how do nonprofit organizations meet the residency requirement? They don't have owners like a for-profit business. So we recognize that, and so for the purpose of this program, you can use the residency of the board of directors of the applicant organization. For example, if 50% or more of the board of directors are residents of Minnesota, then the organization meets the residency requirements of the program. I don't expect this to be much of an issue for most organizations applying, but it may be an issue. We do not expect you to submit the driver's licenses of half your board of directors in the application. Nonprofits will be handled slightly differently, but just indicate that provide some kind of documentation that confirms the residency of your board of members. It could simply just be a Word document with the list and the residency status, and we can handle the documentation later on in the process. So that one's relevant for nonprofits. Some more questions related to nonprofits. How can I determine if my nonprofit organization is eligible for this program? So nonprofits that earn revenue on an ongoing basis through a fee-for-service model similar to a for-profit business and whose operations were restricted by an executive order to reduce the spread of COVID-19 are eligible for this program. Or nonprofits whose operates like a business and saw a 10% drop in revenue. This includes nonprofit theaters, concert venues, museums, art organizations, fitness centers, and other organizations that generate revenue on an ongoing basis through a fee-for-service model, such as ticket sales or membership dues that are not tax deductible. Next question is, my nonprofit organization was not able to sell tickets for our annual fundraiser due to COVID-19. Are we eligible for the program? So nonprofits that rely on multiple sources of funding, including annual fundraisers, ticket sales, but do not earn revenue in similar ways to a business, or not directly restricted by an executive order to reduce the spread of COVID-19, do not meet the definition of eligibility for this program. Question. This relates to revenue. So I received one or more grants or forgivable loans in 2020. How does that count towards my business's revenue in 2020? Generally, grants are counted like any other revenue received by the business and are subject to state and federal taxes. However, some financial assistance, like paycheck protection loans, are treated differently and are not taxable. So, key thing is please talk to a tax professional about all these issues. We can't provide tax advice. It's also going to be dependent on the program. But for example, paycheck protection loans were loans, they're not taxable. And then certain financial assistance is taxable and some financial assistance is not taxable. For example, small business relief grants issued by the state of Minnesota are taxable. And so you would count that as part of your revenue for the year in which you receive that. So next question is my business lost more than 10% of revenue from paying customers during 2020 due to the COVID-19 outbreak compared to 2019. However, I received enough financial assistance to make up the difference. Is my business eligible? If your business was not directly restricted by an executive order and you received enough taxable financial assistance to make up for any revenue loss due to the pandemic, your business will not meet the financial hardship requirement of this program. So for example, if you received a small business relief grant of $10,000 in summer of 2020, and that makes up the difference that you saw the revenue loss between 2020 and 2019, then you wouldn't meet the definition of financial hardship. So you ought not to apply, and if you apply, you will be found to be ineligible. However, it gets a little complicated when you start talking about things like paycheck protection loans, because those are technically not revenue. It's a loan. Even if it's forgiven, it's still a loan and it's not taxable. So you wouldn't count that. So basically rely on how you report your taxes in terms of any financial assistance you received, and you will be good to go. Another question related to revenue is, compared to 2019, my business did not see a decrease in revenue compared to 2020. However, my cost increased significantly due to a number of factors. How can I show that my business faced financial hardship? So this program intently prioritizes businesses that face significant revenue loss and or whose operations were directly restricted by an executive orders. A business that saw revenue increases even while costs increase and whose operations were not directly restricted by an executive order does not meet the definition of eligibility for this program. Another question this relates to self-employed and independent contractors or self-employed individuals and independent contractors eligible for this program. Yes, they will count as a business with one full-time equivalent employee. Related to that, if you're a business that hires independent contractors, you cannot count them as employees. They're not. They're independent contractors. They are running their own business and they can apply on their own behalf. So, for example, a typical situation might be like a hair salon. So you have an owner who is also providing hair salon services, and they rent out a number of their chairs to other stylists, and each of those are independent contractors on their own. They can apply on their own. The hair salon owner can also apply separately, but cannot count those independent contractors as employees. So employee counts. What do we mean by full-time equivalent employee? It's important to remember that the amount of grant you receive is based on your demonstrated number of full-time equivalent employees. So you can have up to 200 FTEs and receive a maximum grant of 25,000. So how is that defined and how is that calculated? And how are part-time employees counted? So a full-time equivalent employee means an employee works 40 hours or more on average each week. And part-time employees can be counted in one of two ways. There's a complicated way and there's a much simpler way. And this follows in line if you did participate in the Paycheck Protection Program, very similar to the Paycheck Protection Program. So the first method is you calculate the average number of hours paid per week for a part-time employee during the year. And then that's the FTE count based on 40 hours. So if they work 30 on average a week, that would be a 0.75. If you have another employee that works 10, that's a 0.25. Those together is 1 FTE. You can also just use the second method, which is much easier. Each part-time employee equals 0.5 full-time equivalent employees, whether they're paid for fewer or more than 20 hours per week. A couple questions we didn't cover last time in the last presentation on September 14th is the application portal itself. So you will receive automatic emails from the following email addresses: at webportalapp.com or at zenhq.com. You may wonder, are these emails legitimate? Why am I not receiving emails from the state? So the application portal is provided by a third-party vendor called WiseHive, and the product we're using is called Zengen. Webportalapp.com is a URL provided by WiseHive that hosts Deed's application portal. So these are legitimate emails. You are receiving them from Deed staff via the application portal, and that's how we will communicate with you. And Deed staff have administrative access to the portal and are responsible for sending all emails. Any emails you receive from these addresses are legitimate. But be sure to make sure emails from this address are not being blocked by your email spam filter. One thing I forgot to cover, I'll cover now, is that once you create your profile, not your application, but once you create your initial profile, you should receive an automatic email. If you do not find that email, then either you entered your email address incorrectly or the email is getting blocked by your spam filter. So depending on your email service, go into that spam filter, make sure you add these addresses in there so you're not getting, you can continue to receive these emails because this is at the volume that we're dealing with, this is the only way we're going to be able to communicate with you as quickly as we can. And then another question is, when I submit an application, where is the data stored and how is it kept safe? So note that only authorized individuals have access to the application data, and all data is subject to state law, and all data is stored on Amazon Web Services servers and is protected by Amazon Web Services Cloud Security, which is gold standard industry security. And you can find more information at this link at wisehive.com/security. So that's it for the questions. Once again, the following is the website that you can go to find the application itself, and then you can submit your applications at mscrg.deed@state.mn.us, and we will update that FAQ as much as every other day, if not every day, through the 10-day application period. And please, before you email us with your questions, please review the FAQ First, no doubt your question has already been asked. 90% of questions have already been asked, and so you're going to find an answer quicker by going that way. But we will try to get to every single person who emails us via that email address. But just note that we will also be updating an FAQ. That's the best way to get your answer quickly if it's already been asked. So with that, we can transition to any questions that have been asked in our presentation here. And so I will start with questions that have the highest amount of votes. And let's see, we got 50 questions here. And we'll do as many as we can in the time that we have. All right, so first question is, great question is, do our grants from last year need to be included in our annual income? Once again, that depends on the program that you participated in. But if it's any of the state programs, likely yes. So for example, like small business relief grants or the county funded or the state funded county relief grants, those would be counted as income. The next question is Kristen asked, do they need our complete tax return or upload the Schedule C only? Great question. I would, on the safe side, the complete tax return, though the Schedule C may also work as well, but belts and suspenders on this, just the complete tax return just in case, so it won't delay your application unnecessarily if there's a need for follow-up. Could you please clarify what randomly selected means? So what that means is that we have the methodology is based on stratified random sampling. So this is like a polling methodology. And basically it digitally, you're assigned a random number and those random numbers are selected. And so we've developed this process in concert with the Minnesota Lottery, and it meets all the standards of a legal random selection process. But a caveat to understand, and we will have so much documentation that you'd be happy to read it, is that it doesn't necessarily mean that each application has an equal chance because there's prioritization factors. So in a sense, some people, based on the characteristics of their business, like if they never got a grant before, they may have like the equivalent of 2 lottery tickets versus other businesses will have only 1. That's not exactly how it works, but that's probably the closest analogy that I can make with the time that we have. By all means, on our program website, you will have the full documentation on how we will do the selection process, and that will be recorded and made available to the public should they request it. And that's what we did last time. Next question is, driver's license needed for all board directors of a nonprofit in lieu of owners. So this is specific for nonprofits. Where it asks you for documentation of residency, just provide a summary of the residency of all your board of directors, verifying that more than 50% live in Minnesota. And then if there's a need to verify any further, we will, but it's a special consideration for nonprofits since they're not owned by individuals. Next question is does the PPP loans qualify as small business emergency loan program? So that's PPP is a totally different program. That's a federal program, and that is not a small business emergency loan program. So the Minnesota Small Business Emergency Loan Program was a separate program that launched, I believe, in March of 2020. That is a separate program and is considered differently. Roughly about 1,000 businesses received those small business emergency loans. So if you're one of those businesses, please note that and fill out your application accordingly. You are not ineligible, and you may still be meet the definition of financial hardship, but it may impact the prioritization of your application. Is FTE measured on a certain date or an average over a set period of time? So it'll be the average of 2020 or the current employee count. We don't want to penalize those that were, had to lay off a bunch of people in 2020 due to financial hardship. So, we're willing to take the higher number of whatever you want to demonstrate as your FTE count. But you will have to demonstrate that is in fact your FTE count. The next question is, I previously read that we must add forgiven PPP and federal PUA unemployments must be added in the 2020 revenue. Is it sounding like this is not the case anymore? It's based on your taxable revenue for 2020. So PPP, you have to look at how PPP and PUA are treated on a tax basis. PUA is an even another complicating factor if you were for example, like a sole proprietor that receive pandemic unemployment benefits. Please talk to your tax advisor on those questions. And we'll try to address those in the FAQ as best we can. There's so many different complexities that we're not going to be able to address those in the call today. What driver's license info do you submit for nonprofits? We addressed that already. If the business opened in 2019 and only operated for a partial year, can they qualify for the grant? If so, how do you measure year-over-year revenue loss? So this question gets to a situation in which, let's say, the revenue of the business is higher in 2020 than in 2019. Because for whatever factors in 2019, maybe you weren't fully up to scale, but you did generate revenue in 2020 such that it looks like you earn more, and you did earn more revenue, and you don't meet that definition of that 10% definition of financial hardship. In that case, if you don't hit that 10% threshold in revenue loss between 2019 and 2020, and don't meet that definition of financial hardship, then you must meet the other definition of financial hardship, which is that you are a business that was directly restricted from operating by an executive order during 2020. So for example, if you were a hair salon or a brewery or even a dental office, you were directly restricted from operating by an executive order. And so you would automatically qualify as meeting that financial hardship definition. But if you otherwise are not a business that meets that definition, either definition, then you are don't meet the definition of eligible for this program. Is the session being recorded? I forgot to mention this at the top, but yes, the session is being recorded and you can watch it at a later date. The previous session is already up on the website. So if you want to watch that, you can also watch that and we'll get this uploaded as soon as we can. The next question is, what percentage of ownership is required to qualify for a prioritization based on women-owned business? So that is a majority-owned business. So more than 50%. And that's the same for veteran and BIPOC as well, Black, Indigenous, people of color. Another question on PPP, do we add forgiven PPP funds to 2020 revenue? Generally, my understanding is no. Please consult your tax advisor on that question. Do businesses without physical questions qualify? If so, does the owner need to have a PO box or can the business address match the home address? This is a great question. I hadn't thought of this one. Businesses without a physical location do qualify. And the business, the location of the business should be, in that case, the same as the location of the owner. We need to know that the business is based in Minnesota, and that the owner is a resident of Minnesota. And so you have to demonstrate where, in fact, the business operates. Next question is, will the slide deck be available after this presentation? Yes, it will. And it'll be available on the website. What can you use if you don't have a business tax return? Well, if you have a business, you should be paying taxes. If you're a sole proprietor and you're paying taxes as an individual, you would use that, your individual tax return. Or if you're a single member LLC and you essentially have a disregarded entity and you take that income and you're taxed on your personal return, then you would include that instead. Do PP loans also impact priority? No, they don't. Only those state funded programs mentioned in the top are impact priority. The next question is, will the slide, oh, yep, we already answered that. Follow-up question, did you say Schedule C alone is acceptable and don't have to upload the entire 2040 tax return? I encourage you, if you can, just to upload the entire 2040 tax return. Just to make sure that our administrators have all the documentation they need to quickly verify that your business is eligible. And Kristen asked another question in annual revenue, gross receipts. What we're talking about is we're talking about the top line total revenue to your business, not the net profits, the total revenue. Can you please clarify on nonprofits? What if a nonprofit earns some revenue from fee for service and contracts, but also from fundraising? Are they not eligible? So what we want to see is a business, nonprofits that operate like a business that earn at least 50% of their revenue via the fee for service and contracts. Example, there's a great little venue in my area called the Cedar Culture Center. It's a concert venue. They sell tickets. They operate like a business. They put on events, but they also do solicit donations, receive grants from legacy arts funds, things like that. But 50%, more than 50% of their funding comes from those fee for service, and they provide goods and operate like a business. And so that would, for example, be a nonprofit that operates like a business. Next question is, we are heavily involved, One Roof Community Housing asks, we are heavily involved in distributing funds to homeowners through the COVID-19 Housing Assistance Program, where $800,000 was paid out, and we were reimbursed for those payouts. My question, are pass-through grants considered income for the purpose of this program? Obviously, no such income occurred in 2019. I assumed it is gross revenue tests, not income. So it sounds like this is specific to nonprofits, and this is a pretty complicated question, so I'm going to take that off air and make sure we get you a good answer to that question. I don't want you to give bad information right now. Childcare stabilization grants. So if you're a childcare business, you may have received a childcare stabilization grant from the Department of Human Services. Is that considered taxable revenue? I would refer to that program on that and how that's treated. My guess is yes, but that, once again, please talk to your tax advisor or look at the program guidelines. Having received a childcare stabilization grant is not one of those programs that is considered for prioritization. So it doesn't impact, assuming you are eligible, it doesn't impact your eligibility or your prioritization, sorry. Great question. What time on September 29th does the application have to be in by midnight? 11:59 Central Time. And please don't wait till the last minute. Get that in, make sure there's no issues. It's important to note that when you get your application in, does not impact your prioritization. It's not like first come, first serve or anything like that. All applications will be considered equally and then go through the selection process based on those prioritization factors. Can one individual with 3 separate businesses, 3 separate EINs apply for each business? No. The answer is no. We've recognized that many people may own multiple businesses, or they may own multiple related businesses. We are following with the one legal entity. So if you have one LLC with multiple locations, that's considered one business. If you have 2 LLCs and 2 locations, that's considered 2 businesses, and you can apply only once. You may ask, well, why? I have so many businesses that were negatively impacted. There's only so many funds available, and there's so many businesses that are eligible. So we have to limit it so that we can make sure that that more people have more of an opportunity to receive these financial benefits and improve the survivability of their business as they recover. One question asked, can you please number the frequently asked questions? We do have so many questions, it's hard to keep track. We actually already did that, and we will get it uploaded shortly. So thanks for that suggestion. That's a great suggestion. How does a nonprofit, next question is, how does a nonprofit provide a proof that 50% or more reside in Minnesota? Just provide a list, their residency, and we'll go from there. And that is, I'll double check to see if there's any other urgent questions that I missed that have a lot of votes. And I think we addressed all those questions that were voted on by more than one person. And with that, we are at time. And once again, thanks a lot for your for attending, and thanks a lot for taking the time. And please share this information with your, no doubt, your friends and colleagues and other business owners in your community, and send us your questions, and we will get those answered as quickly as possible. And the application is live, and please get those applications in, and don't forget to hit that green submit button. That we'll close.